Okay, 8:30 Chicago, Globex US Central Time open. We got some key areas of support just below. Some created kind of the end of the trade day yesterday and a very big level just below that. Markets had some recent pivot highs and then it pressed another pivot high in the overnight session during the EU markets opening and going forward, and then it's been kind of crud then. Market opening, not much going on. Any push above this level, I would definitely be willing to entertain looking for short side action above that level. And any sort of pullback to this area it's okay. It's kind of, it's not like it was built during the U.S. cash session hours where the predominance of volume is. This is kind of right at the end of the trade day, and then there's a key pivot during the prior trade day, 29th of January, the 30th of January. That would be an area I'd be more willing to take a shot at looking for long side action and so on. So anyhow, we'll stand by, see if we get a setup, but pull back this area or below and a hook up, I'd consider a buy. Press to or above this recent pivot, definitely would be willing to look for a sell. Now, these are non-recalculating, no repainting, adaptive price bands. I first built them in 2008. I have all kinds of new endpoint smoothing math I've discovered in recent months that are going to be a part of this evolving indicator, where I get it out to the grid algo group in current form and then keep adding more and more endpoint smoothing actions, which is kind of an interesting work to get that to work. The biggest limitation really is NT8 graphics, the way NT8 works on .NET, Microsoft .NET framework and the DirectX. It's showing its age, the NT8 platform. That's why this is getting put into Quant Tower right now as we speak. Matter of fact, this weekend there's I got a huge programming push getting this finalized in Quant Tower, just so we can have other options, and then it will be in TickBlaze. That project's going to start that project's going to start on the 22nd of February is when the guy can start it. So we should have, I should be able to test the iGrid Pack 1 and 2 tools that we put into TickBlaze by the end of February, and then get that rolling out into the end of February, first part of March. First Quant Tower, though. So standing by, a bit of a chop open, and we'll see if we get a push or a pullback, and then it's battle of the bands. We'll work both sides of the bands. The bands give us a visually efficient, dynamic range. Hey, where are the boundaries of price? Where is value to be a buyer? Where is value to be a seller? And the bands give us an ongoing bar close by bar close guide of where that is. And the arrows are just letting me know when I'm getting reversal candles. The key thing that I'm looking at is where does the dual bands, the fast bands, cross back inside the main bands. That's what I'm looking for. Here's one right here, pre-market, or in the overnight session. So those crosses is what I'm looking at. There's a cross right there. So can I work the diamonds? I mean, not diamonds, the triangles? Sure, I could if I'm experienced and I have my setup dialed in, if I want to throw in a little liquidity, but that's not really what I'm paying attention to. And the nice thing is both bands, the width of the bands and the responsiveness of the bands, whether it's the main bands or the fast bands, are completely adjustable. That way you can fine tune them and dial them in, whether you're trading futures, crypto, stocks, or whatever. Because these bands are also right now going on Thinkorswim platform for those into the stock, ETF, and such trading, because we have the iGrid indicator already in the Thinkorswim platform. So that has been a really tough platform to work on, but we're getting over the hump with it to start accelerating things there. Just because these bands are super effective to be able to just look like somebody that's a laptop trader. You just throw it on your charts, wait, markets get to one edge or the other, decide if that's an area of price you want to be a buyer or seller, use the arrows up and down, as possible areas to work in some liquidity or wait for the crosses. And the crosses, we will have vertical lines you can toggle on and off. They will be outputs you can use with third-party tools, and you'll have audible alerts and all that good stuff. The band positioning, bar close by bar close are outputs, and so on and so on. So we're just getting warmed up. The iGrid Pack 2 release of this has some initial outputs, and as traders tell me they want other outputs to use with third-party tools, and as I keep adding additional options for endpoint smoothing, this is going to turn into one badass, substantially growing in interest by word of mouth indicator pack. So there you have it. Let's stand by, see what we get. Okay, so we did get excursion. We broke this level. If I get any hook in the fast bands, both the upper and lower, I'm throwing in liquidity because I like the area price to be a seller. And then I just put a stop above whichever is the most recent highest price pivot, and sit back and wait. We trade to mid-band area. Anything beyond about 1.5 to 1 or mid-band, whichever happens first, I want to move stop out from break even to break even plus. I'll go through that. So there we go. We've got an excursion. Fast bands and price are outside of the main bands. We've had our first reversal candle, so we get the arrow. The arrows are outputs for the indicators. You can use those. Somebody wants to pepper in some liquidity into moves. I always suggest it's best to at least wait for the hook of the bands before you engage any sort of mean reversion or counter trend trading. And, I do pay attention to levels, like where are key levels at. And when we get a key level, a test or a sweep in this case, this isn't a really prominent level, but we're very near some other prominent levels. So it's an area price I'm willing to take a shot at and be a seller if we get a signal. Now, the nice thing about the bands, if this grinds up for 2 hours, because institutionals just keep pumping it, they're buying 0DTE options, they're buying baskets of stocks, automated options, automated futures, and it grinds for 2 hours, this fast bands is not going to come back inside the bands, and I don't have a signal yet. So I get to avoid all that BS. In the past, trying to fade stuff, you get your face ripped off if you don't know, what's going on. So right now I'm basically waiting for a hook of the bands, and then I'm willing to engage at that point on a hook. If I really wanted to wait for confirmation, I'd wait for the fast bands to close back inside, or at least come down and touch, then I could engage. I mentioned in other videos, it's important for me, if I'm going to sell the market, I want to sell at the mid band of the main bands or above. Just like if I'm going to buy the market, I want to, when I got the hook here and hook here, I'm going to be a buyer. I want to buy at the mid band of the main bands and below. So the value area to be a buyer is at the mid band and below. The value area to be a seller is at the mid band and above. Okay, getting close to some hook here. We're getting that hook forming. And I'll wait a little bit. It's almost there. I want to see that hook down, and then I'll engage. Especially if we get some secondary push that goes higher and we never get the hook, then I'm just patiently waiting until I do. Sometimes you get those pushes. It's a big push. Okay, now see how we're getting the curvature? So let's put a sell limit in here. Let's go about this. 17s is fine. 17 quarters. I want better price positioning. And if it just runs to mid-band, then I'll just sit on my hands and I'll wait for another setup. Now, if I do get filled, I'm going to put a stop just above most recent price pivot. I could have just right away, as I saw the hook, worked in inventory. I would have been right in this price range anyhow. Probably would have been about the 1650s. 1675s. So I'm going to go for a little bit better than that, see if I can get a fill. Otherwise, if it just runs away from me, hey, I missed the setup. But I mean, I'm trying to shoot a video, trying to tell you what's going on and all that good stuff. The key is once we get to mid-band, any risk I have on, I want to work that out. Because a lot of times, price can get to mid-band, it'll consolidate, and if it's going to lift and run again, then that's where it's going to do. If it's going to break down, it'll rip through the mid-band area and just run to the other side. Okay, partial fill and full fill. So let's get a buy stop in there. Right above the most recent price pivot area. I would say never put it above any highest triangle top. The most risk you would ever want to consider in one of these trades would be the top of the fast band where it hooked. So I don't want to put on that much risk. We'll leave it right there, and we'll stand by and see what we get. Okay, if you're going to trade this with a very active management, trade what I call tight. We are at mid-band. I should definitely be bleeding out any risk. Now I have a free trade on. So what am I looking at for potential areas? Well, we do have a price pivot right in here. Prior price pivot. So I always look for areas where could the market kind of run to potentially, where it could maybe get a bounce. So when you walk in the front door, you always want to know where your exits are. So I'm always looking at, there's obviously, this is pre-market, the opening range. We might have a little bit of support right here. This is the edge of the U.S. cash session opening range. So that would be the bands, or the price would have to push through the lower band to be able to tag out that. And then that's where it could, if the opening range buyers just sell to cover into sellers that are initiating new trade, we'll get a probe lower and very likely make a run, to this level or lower. So I'm not in a trade right here to go catch 1,000 points. I just want to get in and get a hit. So if I'm trading a 150K prop account, I can, try to finish the day at around 710-ish. If I'm trading a 300K account, 1,100 to 1,250 a day, just cool, calculated, and methodical. In special operations, we used to have this patch. It said smooth operator. So you just want to be a smooth operator. Get rid of the emotional reactivity. Just kind of be mechanical. Methodical, systematic, and boring is where the money's at. Now, the nice thing, all these various outputs in the tools, you can tie them into like Algo Studio Pro and trade these setups fully automated, or Bloodhound or Blackbird Markers Plus. And what's the newer one? Captain Optimus from Ninja. But it seems like more of my group is using they're either guys that have been on Bloodhound, Blackbird, guys and gals for a long time, or they're traders that are onto the Algo Studio Pro, and a few guys on Markers Plus. So I have a mix. But why build a NinjaTrader strategy anymore when you can just take outputs from tools that are catered toward very methodical, mechanical, systematic traders, and let the trader go off and build their own custom automation, meaning, hey, that happened, put me in a trade. Okay, this is where I want my stop. This is where I want my targets. As the market moves in my intended direction, do this. And, just everything just happens mechanically and methodically, that, very specific system related outputs and requirements get you in the trade, and then that third-party tool takes over from there. Okay, we'll stand by and see what we get here. Okay, we scrubbed around here a whole bunch. Now, if we break, we'll probably get a push. That'll put me over 710, and boom. One and done, over 710 on the day, and that's how you do it. Basically, it's battle of the bands. We're playing both edges of the dynamic market. In other videos, I'm going to show you other trend following trade setups you can use using the dual bands. So there you have it. For any questions, info@gridalgo.com. You guys all have a great day.